Good morning, traders. It is Tuesday, February 4th, 8:31 a.m., and I am your host, Antoine Farrar. Welcome to another video of Digital Goats Academy. And today, it's Tuesday, so the market really hasn't made its moves yet. But, I just like to give pretty much an overview on what I think might transpire in the market this week. Pretty much, from Tuesday all the way to Wednesday, possibly Thursday. But let's kind of talk about what happened, from last week, Monday, and up to Tuesday, guys. So just sit back, relax. Let's jump on these charts. Hope everyone today is already having a successful trading week. Like the market's been pretty straightforward, especially when we're looking at indices. The one thing that I did want to talk about too is gbpusd. So that's British pound, United States dollar. Now, this is a forex pair, so it's not strong with volatility. So its movements are pretty stagnant until it actually breaks out. But if you remember what we were talking about last week, if you saw my video from last week, I think I either did that on the Fed rate decision or the video prior to that. Matter of fact, off of the Fed rate decision. So I started talking about GU off of the chart marking video, but then I gave more clarification on, as we were getting more data, like what I should expect GU to do and what it's currently doing. So remember last week we discussed that the market should stay below this red line that I created. Reason being is that would confirm that we are actually bearish. And as you see, anytime that the market has approached back up here since last week, let me pull it out to a higher time frame. That's not. Yeah, we'll keep it at an hour time frame. But anytime the market approached back up to this red line, which would be considered resistance, the market rejected it. It tapped it, pushed down, pushed back up, actually gapped. So over the weekend, the market gapped. That's something that I definitely want to talk about. And you can see that since Sunday, the market has recovered all of the money that it dished out, or all of the money that the banks lost on over the weekend, pretty much. So from Friday all the way to Sunday, the banks lost money. Banks are recovering their money now. If you look at it from that perspective, you know what I'm saying? So today we're still below this line. It hasn't been 8:30. I mean, it hasn't hit 9:30 yet, opening bell, but we're still below this level of resistance, which, like I said, this gap was up here, and this market has clearly rejected this gap over and over. That's something that I like to see. Now, if you look at it just on the hour time frame, I mean, you can see that based off the structure that the market has been showing us a bearish trend so far, actually aligning with our overall trend that we drew when we were creating the chart analysis. I mean, the chart reading video. So it's still staying relevant to this trend, which is a downtrend. And even on a smaller time frame, it is creating a downtrend unless it decides to break that. So far, so good. Like I said, I do believe that the dollar is bullish, especially with the inflation that we have going on in America. And I think it's going to stay bullish with, manipulation, confusion drawn into the market. And we may even start ranging for quite a while before the market decides to break out again. The dollar is normally like that. It doesn't really move. Like when it moves, but then it'll slow down. It's kind of almost like oil if you guys trade oil, right? So let's check out our stocks, right? Y'all know I've been talking about S&P a lot, NASDAQ. Matter of fact, let's look at the NASDAQ just because it's tech-based. And if you guys see that Bitcoin has been basically ranging between the dollar amount of 100 and I think it was 105 to, like, I think the lowest it had was recently was $93,000. That's where we came from over the weekend. So it's currently around like $99,000. It did touch like 100K earlier today, like this morning. So I do expect Bitcoin to remain bullish with, the sideways movements until it's ready to break out. So that goes in hand with Nas. If you see, Nas has been ranging as well. We still have Nas like not breaking from this range high or from this range low. Let me draw that out a little bit more because I like for it to be, as you get more data in the market, guys, you want to extend your annotations. You want the market, you want to follow basically what the market is doing. So you know if it returns to these points, what type of action you should take on the direction of the market, right? Hopefully you know that. For real. Always like how I'm pretty close when I do that, you know, not too far off. Okay, that one's a little bit further. All right, all set. Emma. Okay, I'm all set now. I don't know what I was just seeing just now. But anyway, you see that this market is currently moving sideways. That's the NASDAQ. So it's been bouncing between this level of support and this level of resistance. Like I said, I have it and I identify it as a range because it's on a higher time frame. You could say that this is consolidation, but I mean, you would have to probably go out to like the monthly or the weekly for it to be in that image that you're looking for to say consolidation. You know what I'm saying? So because it's been bouncing on pretty much a higher time frame, like again, if you turn to the daily, you turn to a line chart, you can see that it's consolidating, but really what it's doing is ranging. See? So my expectation is that because it's been hitting this support so often, not to mention we created this bullish engulfing candle right here, which is kind of left on the island by itself. And the one thing that I like to see that's pretty much from that gap that happened over the weekend. So almost all the markets either gapped up or gapped down. Like US oil gapped up, showing that's the direction that it was trying to go from Friday. Same thing, and now US oil is bearish. So basically, these markets gapped up or gapped down to positions that they were trying to correct themselves off of. So even when you look at US oil right now, we can go to that shortly. You can see that US oil is starting to sell now, and it gapped up because it wanted to come to a position to bring the market down even lower. And then NASDAQ, US 30, S&P 500, they all gap down in order to pretty much establish a level of support to continue in that direction based off of what we're seeing, based off the technicals. So once 930 hits, I expect this market to still try to push up even higher. It'll probably be slow. I mean, it's a Tuesday, so there'll probably still be like some manipulation thrown up in there where the market just won't start the trend until probably like tomorrow or maybe London session. So looking at it right now, you see how slow it is, but the signs are there on what it's trying to do. You know what I'm saying? Um, we could have a candle that pushes back down at 930. I could see that just to retest. And like I said, that's why it's important to look at a line chart, like to see what the market is showing you. Either it could push down back to this position for the previous high, or it can try to make support here. Yeah, so around this time frame, the market tries to do what I like to say, slick shit. It likes to do slick shit, right? So if you look at all three of these candles, this bullish move right here, we're currently retesting this candle right here, but I could see the market trying to be crafty and retesting all of these candles down here, maybe even coming back down to the body. It's just something to notice, you know what I'm saying, or be aware of. That way you're not shocked, like, or think that the market is going in the opposite direction. You know what I'm saying? Because again, we don't know if the market's going to take off from here, but normally around this time, the market tries to dip to, you know what I mean, to create a false or push up to create a false narrative on where it's actually intending to go. Um, and then push up or push down. So I could see that just because we haven't actually tried to push this structure down. Once we have, a candle to push this structure, or if it's continuing, because this could just be consolidation that's continuing and then decide to pull back later. But it just depends on, what is the data that filters into the market, and what the momentum is currently. So let's kind of actually look at Hakanashi candles to see. That's too big. So you see, even with the momentum, it's hard to call it. You would say, blue, green candles are just as equal to red candles. One thing I do see is that within this range, there has been a lot of bearish momentum. But you see, every time the momentum has been bearish, the market has actually like pushed back up. So again, it's hard to call it from here. If we're just analyzing the overall momentum, like on a higher time frame, the daily is showing us what we want to see. Just coming back from here. So this is the range low of the NASDAQ, not to mention that this is a previous level of resistance. So what do we know when the market breaks about of like a level of support or resistance? To confirm that it's still going in that direction, it must bounce off the previous high, or the initial area that it broke out of, creating what? Creating a new level of support. So we have a new level of support, and we do want to establish it even more, but again, this is trending, so it doesn't look like that. But and ignore this, I just have this for my own annotations, like from my own memory. I'll see if this still plays out the way I want it to, based off of this pattern. But it looks pretty solid so far. So we've broken out of these levels currently. The market, that was last week. The market touched this previous level of resistance, which is now support. We know that because it was the range low. And then currently we're right here, and we don't have any more data like on the daily time frame because we're waiting until 9 o'clock. Then it's a little slow, but just looking at this structure right here, it looks more likely that this market is going to push up than it wants to push down. Nothing is stopping it from pushing down, but we've created support right here. Then we drove the market down a little bit more. That's very common in order to create, what I'm saying, create the false narrative that the market is continuing to push down. Because again, we got to start from where we're currently at and then work our way back. And if you look, you'll identify stuff, support. This was a previous high, not to mention it was a previous high on a higher time frame, previous high. So you could even say that the market manipulated this support in order to break down low in order to retest this previous high. Y'all see that? Clear as day. Even within the range, because I mean, when you break it down to smaller time frames, it's still a trending market. So until you break out of the range or the consolidation, you won't know the direction. But within that range, you know, we still could make adequate moves within this time zone until the market like pushes out. So we'll see once 9:30 comes. I mean, it's still early in the week. We still want more data, but as far as we're seeing right now, it looks good for the buys. S&P too. Yeah, I like seeing that pattern. This candle opened 45-minute, so it should open bearish a little bit, wanting to push down. And see, this was a previous level consolidation that I had. You know, and if you know anything that I've talked about in the past, I've talked about how consolidation, like S&P or indices, love coming back to consolidation. And even when it breaks below it, if it's still maintaining either above or below it, then you can still use that information for the current market trend. You see what I'm saying? So this isn't even like relevant, well, related to what's happened now. If I go back, how far? Man. Hmm. December. December 29th is how relevant this consolidation is. I can still use this information to say that, okay, if price stays above this consolidation, it's still bullish. If price breaks and then retest, because even a break doesn't confirm that it'll be pushing down. We need a break and then a retest. What candle is this? The 3 hour? Again, what do we like to see? We like to see the market retrace using the Fibonacci tool, a candle or a trend, 38 to 50%. You know, I reiterate this stuff over and over and over. These are the same, you know what I mean? These are the same tactics that I use to make money in the market, guys. Like, it really doesn't change. You know, I adjust fire when need to, but it's really, you know, the same across the board. So right now, we're currently at the 382. I would love for this thing to take off from here to the upside. But you know, we're still early. We're still early in the New York session, and we still have 9:30. So again, this market can decide to push down here. And again, the logical thing to expect is for the market to want to at least fill this entire candle right here. That's the logical thing, so you're not caught off guard. And that's what I was talking about the market could push down a little bit lower to cover all those bullish moves that it made this morning, because we're going into 9:30 and then take off from there around like 10:30, like hold this position and take off around like 10:30, and then retest the same area around like 12. But we'll see. We'll see. You know, no rush. Everything is just a waiting and patient game. You know what I mean? You set your parameters, you wait for it. And even if the market was to go technically against us, we still have enough data to say that, okay, if it broke, I would wait for clarification to see it's like retesting back to this consolidation and then pushing down. And this doesn't, you know, this is just for me, like my annotation. So somebody else like chart maybe a little bit different on what their expectation is. But, you know, when you create these parameters for yourself, it's almost surefire, because either way, whether you're wrong or right, you still get enough data to make a right decision in the market. You feel me? So that was it for our little session today, guys. Like, again, overall, I'm still expecting indices to push down. Like, let's check Bitcoin real quick before we close this session. Same thing with Bitcoin. What time frame was I looking at it on? Yeah, so it's slowly moving up. Not much momentum in the market. So again, we'll have to wait. And then even like 9:30, 10 o'clock doesn't even promise anything because this market just looks overall slow. We probably won't get nothing until like later on, closer to like 2 p.m. Like I'm Eastern time. So probably like if it doesn't react, this morning, it'll probably react closer to after the close of the European session. Because at that point it's just the dollar, United the American session or the New York session. So it's pretty much, American money flowing at that point. And we'll see if we have a boost from there. So that's my expectations for today, guys. I hope you enjoyed this video as always. So just meet me back here tomorrow, Wednesday, for YouTube. Definitely expect that, I'll be going live for you guys. Like 2 or 3 people have reached out to me already. So appreciate the feedback and, hope everybody has a successful trading day as always. So this is Antoine Farrell. This is another Digital Goats Academy video. As always, guys, hit that like button, drop a comment, and always hit that subscribe button on your way out. I will see you guys Wednesday.